For the New York City mayoral election, there was talk in the days prior to Election Day that Cuomo's odds were improving because the early turnout was comprised of older, more moderate-leaning Democratic votes. So there seemed to be anecdotal evidence pointed to Cuomo gaining in probability, but our markets really didn't reflect a sizable increase in former state governor Andrew Cuomo's odds. In fact, Mamdani's probabilities only went down to around 85%, and then really recovered quickly after that. So it never looked like Cuomo really had a chance. Similarly, in the New Jersey governor's race, there were talks that Ciattarelli was looking to potentially post an upset against Mickey Sherrill. That also didn't occur. Mickey Sherrill was right in the mid-80s, 82%, 85% or so. We never really saw a big difference there. And then in the Virginia election, that was more of a landslide as well as Proposition 50. When anecdotal evidence was suggesting a potential surprise, our prediction markets really did well in what they're supposed to do, which is to describe the probability at the moment of a certain event occurring in the future. So we're really happy that occurred.
What was the trading activity leading up to the recent elections?
We've reached year-to-date record volumes in the run-up to this election. We've started to see interest spike last week. We had a day north of 3 million. We've been achieving new peaks in trading volumes for 2 consecutive days this week, on Monday and on Tuesday. Yesterday, which was Tuesday, November 4th, Election Day, volumes got up to 12.68 million. Our prediction markets have, this time, for this election, essentially predicted the 3 major races as well as Proposition 50 in California.
Were there any whales moving the markets?
There was certainly a mix, and we had some huge orders come through. But the issue is that now that these prediction markets are well established and we have deep liquidity and really active arbitrage going on across exchanges and across some of our competitors. So it's really tough for a big player to come in and try and manipulate these markets because those mispricings are picked up really quickly. Artificial intelligence, AI, making its way into prediction markets. A lot of folks, they're consistently pricing out events, and when they see that there's a dispersion from what their opinion is and where the market is at, then it immediately will start buying yes contracts or no contracts corresponding to that particular view. So yeah, we've been up for a few days. We've been watching these markets move. And, this time around, John, I'll tell you, the probabilities were relatively unchanged into the election, and that's a stark contrast from what we saw last year with President Trump and former Vice President Kamala Harris. We saw trading really volatile going into the election. This time it was much more smooth. It's last time it seemed like, maybe Harris is gonna win. Oh, maybe former President Trump is gonna win, and you had the odds move pretty in a volatile way, even throughout the states being called. This time it was much smoother, and from weeks past, it just seemed from our markets that the Democratic Party in these particular races, as well as Proposition 50, had a commanding lead.
What are the other categories on ForecastEx that have high volumes?
Our financial market indicators, those are attracting a lot of volumes all the time. They've been really attracting interest throughout the season and throughout the calendars. When elections aren't going on, that's been our bread and butter in terms of heavy volume. So we're talking about yes and no contract buying on the S&P 500 futures, NASDAQ 100, Dow Jones Industrial, Russell 2000. Those 4 have driven a lot of interest amongst our participants. One reason is because they're easily hedgeable in the open markets, and it offers all kinds of market participants, investors, hedgers, speculators, market makers, arbitrageurs, just another tool to work with whether you're working with ETFs, index options, ETF options, futures, anything really. This new asset class offers an additional tool to either reduce exposure, increase exposure, or spot arbitrage opportunities. Outside of those tools, we've seen some strong days on Fed days, FOMC. Is the Fed going to remain steady? Are they going to cut 25? Are they going to cut 50 or more? Even as the September decision, John, was quite shocking because everyone kind of knew that the Fed was going to drop by 25. But even though that was kind of known, folks were still piling in on both sides, conducting arbitrage operations with our competitors as well. So that was really interesting to see. We saw a really big day in September Fed funds.
How do your listings compare to competitors?
When you look at our platform versus our competitors, you realize that a lot of the contracts listed, they're much more focused on critical elements that are going to drive society's future. So we're talking about things like elections, the government debt, financial market indicators, economic indicators, which are pivotal and also drive a lot of volumes, albeit less than the categories aforementioned. So we're talking about the CPI, we're talking about non-farm payrolls, the unemployment rate across different regions, Canada, the EU, Japan, Australia, etc. And that's another thing that we've had an edge in with across our competitors, not just in the prediction market space, but also in the traditional brokerage space, where we have a much stronger international footprint than almost all of our competitors, both in the more retail platforms that we compete with, but also in the more institutional, large-scale, big bank space where we're really competing very well if you look at the prime brokerage rankings.
Has the government shutdown affected your ability to add new contracts?
It's been hampering our volumes in the economic indicator space. Not that our overall volumes haven't been terrific, of course. We're discussing on this call that we've had year-to-date records in the past few days. But what folks do like to do, John, is they like to look at the odds of an indicator prior to it coming out. So one thing I do every trading day is I'm reporting on those indicators that are going to be released tomorrow. Non-farm payrolls, CPI, all those things that I mentioned. The economic indicators space, which I'm an expert in because I've been an economist for all of my career, 10 years now. It has prohibited us from essentially saying, hey, this indicator is out tomorrow. There's some exceptions, like Thursday, November 6th, we're going to have the weekly economic index from the Dallas Fed. The Federal Reserve isn't closed, so they're going to release those numbers. Also, the Energy Information Administration Agency, they've been publishing data throughout the shutdown, gas prices, oil production, that kind of stuff. But the most exciting data, John, the CPI, non-farm payrolls, retail sales, GDP, those data points, they aren't there. So, there's been relaxed excitement, really not much enthusiasm in the economic indicator contracts. Similar to what we've seen in the options world, where the expiration profile has compressed, where most options expire in a shorter time frame, 0 DT, we all know that story. That's what we've been seeing from the economic indicators in forecast contracts, but also with elections. Also, once you get closer to that settlement date, that's when volumes climb. So that's where the shutdown has affected us. Conversely, we've countered some of that, barely any, but we've been some countering from the government shutdown contract itself as to when it's going to end, November 7th, 14th, 21, 28th. Hopefully, we won't have to continue extending those dates into December and into January.
How have the prediction markets affected the growth at Interactive Brokers?
So we're seeing an acceleration in new account signups specifically for forecast contracts. We're incentivizing folks to come and grow with us as a company. We just eclipsed our 4 million customer. We are growing revenues, top line, bottom line. We're becoming more of a staple in financial markets just by our size. And despite us being a company north of $100 billion in market cap, we are still looking for growthy areas where we can really add other verticals to our business, and this is one of them, prediction markets. So, we try to get our existing customers to come and grow with us in a separate venture that's still related to all the things that you do, but as well as new customers, we're also incentivizing them, once they open an application with an incentive to come in and to trade forecast contracts, because we think it's going to be, our founder and chairman, Thomas Petterfy, has said that he thinks that one day the prediction markets are going to be bigger than the equity markets themselves. And his vision has really helped us grow significantly, and we're proud of that growth and of that discipline, and we want to continue progressing in all the ventures that we engage in. And this is something with tremendous promise that's already delivered heavy results, positive. And, the third quarter earnings call, we just a lot of further highlights on how forecast contracts have grown, not just in terms of volumes, but also in terms of instruments that are able to be traded, north of 8,000.